Good day everyone. This is your European Open briefing for Friday, 2nd of December. My name is Michael Florentiades and I am the Chief Economist here at xm.com. These are the key points you should know about today. Well, it's basically all about the Trump trade in the markets still, which is what is the Trump trade? Long stocks, long dollar and short bonds as rates go higher because of inflation expectations and fiscal stimulus expectations. Now, this so-called Trump trade is taking a breather today ahead of the non-farm payrolls later on. A very crucial number, which will probably, if it comes in line, will give the Fed a green light to raise rates in around 2 weeks' time. The dollar index is below 101 right now. 10-year yields have backed off from previous sessions highs of 2.49%. Oil was also much stronger yesterday. Today there is some profit taking, but still it's above $50 a barrel. The UK pound is doing better on expectations that the UK is going to be more active in seeking single market access, maybe paying into the EU budget as well. Now, with respect to today's calendar, we have the UK PMI, construction PMI, we have the US employment report and Canadian employment figures. Here you see the rally in Treasury yields, which is the yellow line. It rose all the way up to 2.49% yesterday. So today it's off to around 2.43% right now, near little after the close of the Asian session, beginning of the European session. Now the US stocks and the S&P 500 future is a bit lower, is around 2188. The highs were around 2220, so let's say it's approximately 1.5 to 2% off the all-time high. The Nasdaq sell-off, we had a Nasdaq sell-off yesterday. There were worries about technology stocks, but the Dow Jones 30, which contains more, let's say, old economy type of stocks, companies, hit a new record still. There is some risk of sentiment today in markets, in stock markets, but nothing too serious, it should be said. Now, the pound has recovered some ground. It's gaining with the dollar. It's now above 126. There are hopes of soft Brexit resurfacing. What happened yesterday was that David Davis, who is the official responsible for EU exit negotiations, said that the UK would be willing to pay into the EU budget in order to get single market access in return. Now, given that paying into the EU budget was a key reason of Brexit, wanting to stop paying into the EU budget, obviously, the readiness to make this concession may show that the UK government might be willing to look at some concessions or negotiate a better deal and be more flexible. So we'll see about that. Also, we had a Liberal Democrat pro-EU candidate winning in a London by-election in what was a protest vote against Brexit. Now, of course, London was against Brexit anyway, but it has been some time since there was let's say some popular vote in favor of pro-EU. So this was something that maybe the Conservatives are going to take into account, because it was a Conservative seat that was lost. The euro recovered above 106 as the dollar rally looked a bit tired, as we said. This is a crucial weekend. We are heading into a crucial weekend for the Eurozone because of the Italian referendum and the Australian presidential election. Now, a no in Italy and the far right winning in East Austria would be the worst scenario, of course, but and would likely shake confidence, but it's unlikely to lead to end of the Eurozone world type of developments, because Italy has had political instability in the past, and Austria has similarly had far-right officials in high positions like the Chancellery previously. So it's not something that has not happened before, something so unprecedented. So the market is likely to be already pricing in an Italian no. But I mean, given how surprising market reactions can be, we should say it's an election. So we'll see what happens after the election, and we should be really humble with respect to our predictions, not only about election results, but especially about the market reaction to election results afterwards. So very interesting to see what happens on Monday. On to today's data calendar, we had Australian retail sales. They were better than expected in October. They were month-on-month 0.5% versus 0.3% expected. They didn't help the Aussie much, however, pretty flat against the dollar. We had Swiss GDP worse than expected, so that wasn't very good news for Switzerland. We have the market construction PMI later for November to drop modestly to 52.2. Non-farm payrolls, of course, 175,000, unemployment 4.9%, and average hourly earnings 0.2%. Just three of the main indicators the market will be focusing on in the non-farm payrolls report. I like to look at the labor force participation as well. We have the Canadian employment figures. We'll see whether they are going to boost the loonie as well with the strong oil. And a couple of Fed speakers, Brainard and Tarulu. Thank you very much for watching and have a great day.